study on options, and this one was fascinating. I kind of teased this one last night. Um, the paper's called Overvaluing Simple Bets Evidence from the Options Market. It just came out last month. And it seems that in the retail options market, retail traders are making an incredibly expensive mistake most of the time. Retail almost always goes for the binary trade, put or call, up or down. They're making one-way directional bets using an option contract. Most of the time, and this is analyzed over thousands and thousands of trades in different markets, the majority of the time you were better off looking at a simple call spread because the bull spreads were cheaper based on the actual valuation of the options involved. So you are paying $28 to $45 extra per contract. That's 28 to 50 cents, that's your margin in the option business over time, right? You're overpaying for options most of the time. And on average, buyers of the binary options are losing 34% of the contract price compared to the better alternative of setting up a put spread. Now, I've seen this in working with Anne-Marie lately on the accelerated version of Trade Alerts where we're doing option contracts around the stock. Very rarely, I mean, it's almost never, is just buying the call or buying the put the exact right trade, whether it's bull spreads or selling the options or other things. If you're out there and you're buying directional puts and calls on a pattern or some other technical indicator, you're doing the exact same thing every other retail trader in the market is doing. Now, I shouldn't even have to say that twice for you guys to understand that you're killing your odds. I mean, you're handicapping yourself. This is like running a race carrying a lead anvil when you do that. Okay, so, learn to look at option trades. Go into some of the chat rooms on Benzinga Pro, and I know there's some great ones in there with Anne-Marie and Chris and Matt talking various option strategies. Learn more and, learn to use simple spreads and things like that. And Tyler, bang, you hit it. I only understand the simple puts and calls. And that was exactly the conclusion that the people in the study work found. You're overpaying for simplicity in the options market almost 100% of the time. Now, I don't want to get bogged down in this conversation because we really can, but this is consistent. I don't know too many floor traders that I've met, and I know a lot of them that traded one-way directional bets using a put or a call. I know some guys who got, really rich with either a bull or a bear bias, but they were using spreads like 99.9% of the time. So, get into those chat rooms. If you're not a Benzinga Pro member, get into those chat rooms, learn from these folks who understand all of this stuff. So anyway, that was just a very cool study, academically proving something I've been screaming about for a very long period of time. So
that's awesome, Tim. And I want to reiterate a couple of things here. First of all, Tyler, I completely agree with Zach. You are not alone in that regard at all. When I started with options, I started with just calls and puts. I understand several of the multi-leg trades, but I still consider myself a novice. In fact, anyone that was on happy hour yesterday, I didn't ask for permission to say this, so I hope I'm not embarrassing anybody, but on happy hour yesterday, Amanda, who frequents our show here in the morning and has also been a part of it, literally followed Tim's advice and been a part of Anne-Marie's room, gave a great rundown on using some of the yield max covered call ETFs for individual names and how she actually trades those. And I, just like you, Tyler, I was confused. I need to have that explained to me a few times. Tim, this is a really good point to bring up here. I never even thought about it, that you overpay for simplicity. That actually makes a lot of sense to me. Day trader here saying, I prefer spreads. Tim, every time that we talk to Anne Marie, it seems like she comes up with a way to gain exposure to a stock with less risk than it would be just outright buying calls or outright buying the stock. And to me, I think that this is something that we should focus on. I know one of the things that I'm doing kind of on the side, I'm reading about stuff like this. I'm also trying to enhance my skills. And I agree, Buffalo by Bicycle. Anne Marie is a very good teacher. I would say from any individual, I've learned more from Anne Marie than I have from anyone else. One more thing here, you should definitely follow Tim's advice and check out some of the different option education services that we have. But because this show is all about raising the tide for everybody, I'm also going to give you a free resource. And this is one that's worked for me. It's not even affiliated with Benzinga. It's the Options Industry Council, or optioneducation.org. This is an amazing free resource that will take you from a beginning options trader all the way to an advanced options trader. And again, you don't have to pay a dime for it. I've used this myself with good results. It's been extremely helpful. I still actually use it as a reference.